YouTube, what it do? It's Little Petty coming at you guys with another stock market episode. We're live here in the markets. The markets are trading. We're going to be showing you guys a couple of plays. We're going to be talking about risk to reward, swing trading, further out the money options. This is basically going to be a jam-packed video. I want to give you guys good information because we have been on basically a steamroll, and right now I feel like the markets are been in our favor. So I just wanted to give you guys a video, give you guys some updates, what's going on. Without further ado, let's get into this video. We are going to start out with the pre-market after hour notes. So let's talk about the Sunday options cheat sheet because we're going to be talking about swing trading. Now look, when my sheets come out, I'm basically looking at the market and giving it a perspective of it looks bearish, but it could still be bullish. So you can choose either side, however you want to look at it. Now the way I'm looking at it is like right here with Microsoft, because Microsoft we're going to talk about. We're also going to be talking about, say, Roku. We're going to go over NVIDIA, Microsoft, SPY, Boeing. So as Microsoft, you see we got these 12, 113 calls. Overhead needs to break. Look for pullback with the markets. Markets have been trending up. We got that confirmation on Monday. So as you can see, the markets gapped up on Monday. We made this bull run, and we have not looked back. So how could we take advantage with swing trading? Now, with the swing trading with options, I usually do not recommend the swing trade, and if you do, probably go with more time. But I'm going to show you in this video how we could have swing traded possibly closer time with closer in the money, with the chances of getting closer in the money. I want to show you Microsoft because we have been eyeing these plays, but we have not taken advantage of them. We did take advantage of an AMD swing trade, but that's not the focus. We're going to focus on what we're talking about and what's at hand. So let's get into it. We got the chart, we got the options table. We are going to start off with Microsoft. Like I said, Microsoft, let's go to the cheat sheet on Sunday. 112, 113 calls. We can even come over here and look at the Monday after hour notes. Let's look at the Monday after hour notes. Microsoft 114, 115s. NVIDIA's 165s, 167s. SPY 180 calls. These notes came out on Monday after hours. So let's just go over this real quick. SPY, if the market overall continues to push up, watch out for big cap stocks to follow, like AMD, Microsoft, yada yada yada. You see what I'm talking about. So let's get back to the charts. Microsoft, let's look at the one. It closed on Friday at 110. So it opened up at 111 on Monday. So we're going to look at the 113 calls because those are obviously going to be in play if we wanted to swing trade. We have a bullish setup. Why not take swing trades? Small risk, big rewards. Let's talk about it. So we're going to come over here to the 113 calls. These are right now trading at $1.99, so $2. Now on Monday, these are trading at 60 cents. So we could have bought whatever your risk wanted to be. I'm not buying 10 of these for 60 cents. I might buy 3. Now this could have been $180 trade, and now you could have been selling up here because they're in the money at $2. So that would have been a great swing trade. Now let's go over the NVIDIA because NVIDIA had news coming out. News came out on NVIDIA. They bought a company out. They've been doing good ever since. So When the video came out on, let's go to the cheat sheet real quick. NVIDIA 165, 167 calls. Swing trade. Let's see what that did. So the 167.5s calls right here. These ones were trading on Monday at the open at 9 cents. They made a little run up. They've came up to $1. So if you could have bought on the pullback or when it flattened out even yesterday and they came down, you could have bought these for 60 cents, anywhere from $1 to 60 cents. If you would have swing traded at the earlier of the week, when the news came out, we could have bought the news, could have bought a few of these for 14 cents, and now these are trading at $3. You do the math. I'm not sitting here going to tell you guys what the math is. I'll show you the percentages, but basically 2,000% swing trades. Why not take these plays? So we are looking to set up some plays. The markets have been trending. You have to figure out what works for you, what works best for you. So I like these risk reward plays. You can obviously, like I said, you can trade with 20 cents and then swing trade these for 2 days. Not saying the markets are always going to be like this, but these are the opportunities that we are coming, that are showing up every day, basically. Not every day, but we are getting these opportunities. So I'm here talking about these opportunities. I want to also go over, let's talk about the SPYs. So that, I'm going to go over Boeing. I'm going to go over Boeing real quick for the swing trading, and then I'm going to talk about the further out the money options with time. So look, Boeing. We know Boeing had been selling off. We already did a video on this. Check out the video. But basically, Boeing ended up selling off. Those puts went up 3,000%. The calls ended up bouncing, and then you could have bought these swing trade puts. So let's look at because it ended up closing at 400. So let's look at the 400 puts real quick and see what that swing trade could have been. We'll do the 390s just for time's sake. So the 390s, 1, 2. Okay, so the end of the day yesterday, the end of the day on Monday, these ended up closing at $4. So maybe we can go back farther, but this is just a good example. $4 swing trade, gaps down. They ended up gapping down and selling off, basically doing what it is doing the next day, which was over here. And you could have sold up here. If you would have held, you would have lost more of your money, but you still would have been up a significant amount on this swing trade. So this would have been a $4 move up to $22. So $400 to $2,200. These are the swing trades that we are talking about. That's going to be doing it for the swing trading. Let's talk about the further out the money options, because with the options, you have time that can basically be on your side or not be on your side. So I'm going to show you a clear example of SPY today. SPY has contracts that expire today. Okay, so that means the time premium, the time decay on these contracts are going to be a lot more volatile than, say, if you buy the 2 days out. But the 2 days out are going to cost more. So, for instance, like we said, on the cheat sheet, call SPY 280 calls. And these notes came out on the 11th. Today is the 13th. So we're going to look at the 280 SPY calls. These ones ended up closing yesterday at around 35 cents. A couple days ago, when SPY was trading, I mean, even to buy these when SPY was trading at 275, that's a stretch. But when SPY ended up bouncing up to 278, and then it made that next day run, kind of flat, but still the opportunity, the uptrend, it slowed down. It still did not break the low of the next day. So this is a clear uptrend. This is a 3-day moving uptrend. The uptrend is obviously longer, but we have a clear uptrend. So why not take a small risk and take a swing trade? So for instance, these were trading on this day, yesterday, at 67 cents. They came down to 50 to 39 cents at the close. That little dip. That was a great buying opportunity. Now you swing trade over the night and look what you get. The stock continued up. The risk to reward was in your favor. You're taking a small risk. You could have bought 4 or 5 of these contracts, $200, maybe even $100. 2 contracts, and then you could have basically tripled your money. So though that is that for the contracts. On the time, I want to talk about how you could have gone. You could basically go to the next day. If you don't want to play that, you can still pick up premium, but you're not going to get as much reward. So let me go back because I want to show you guys the 281.50s, because these ones right here were trading today at a low of 12 cents. They've made a high up today to 81 cents. Why did they make that big of a move? Because these expire today. So when these were out of the money and they get into the money, that's showing the time value is going to go up more because they expire today. If you're not in the money, your contracts will go worthless. So if SPY comes down out of 21,850, these contracts will be worthless by the end of the day. So how can we avoid that? We can avoid that by coming out to the next day. So let's look at the 21,850s. Now these ones are trading at 50 cents, and now they're trading at $1. They didn't make that big of a move, but they did make a 100% move, but they didn't make a 500% move. I want to show you the difference. These ones were a 150% move. These ones were a 300% move. So would you rather take the 300% risk, or would you rather take the 150 risk to be safer? And this is another example on NVIDIA, because we know NVIDIA has been running up. Now, would you want to come over here and spend this on the one? We're going to look at the 180s, the 170, the 170 2.5s. Okay. So NVIDIA, these opened up 34 cents. They got up to $1. These expire in 2 days. Now with NVIDIA running up so much, yeah, we can expect to see higher, but we're not going to basically come over here and spend this much money. When it was trading earlier, when these were trading at 70 cents, these ones were trading at $1.36, and they have came down to 97 cents. So that's like a $40 loss. We didn't want to buy these at the top because, you know, NVIDIA has been uptrending. These contracts expire in 2 days. So how can we give us more time? We come out to we come to more time, and we look further out. So we could have bought these ones right here, these 180s. These 180s have came up to 130, but they have only came down to 121. So that's a little trick on how you can basically save yourself in the middle of the week when you don't want to basically play that volatility. You can just come out to a weekly. If we're not in a weekly, because we're in the monthlies right now of the contracts, you can give yourself just a little bit more time and go further out and still get a return on your money, but save your behind basically with time decay when the options, if the option doesn't move in your way. So that's that's basically what's going on. You need to find out. So with trading, figure out what works for you. When you figure out what works for you, that's when you can start taking advantage of how to move forward. For example, I like morning breakout trades. This NVIDIA right here is a clear morning breakout trade. I can show you clearly a bunch of morning breakout trades today. I can show you AMD. AMD had a clear morning breakout. It didn't get the follow through. I like to get the follow through, but we still got to that profit target. So figure out what works for you. I like to trade options. I just showed you guys how to keep your wrist tight, swing trading. My cheat sheet has basically been pretty reliable. I might start focusing on swing trading a little bit more. That's going to do it for this episode. You guys have a good day. Appreciate you guys watching. We out of here.